Hello friends, a very warm welcome to my channel. In this video, we are going to talk about Cochin Shipyard, which was chosen in a Telegram poll with more than 500 votes. Now you can listen to our videos in Hindi also. In the settings button, you can choose the preferred language and switch to Hindi. If you are new to our channel, please do subscribe and hit the bell icon to get updates of all the new videos that we upload. Here is a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion. We'll discuss the business model of Cochin Shipyard in the beginning. Then we'll look at the chart. We'll see the financial performance of the company in the last 5 years, the reasons why the stock has given such a sharp correction from the top, the outlook of the management going forward, the valuations, the risks, and then form an overall view on the company. So before we jump into the business model of the company, let's talk about the Indian Maritime Week 2025, which just happened this week. So during this event, there were more than 600 MOUs which were signed, totaling up to more than 12 lakh crore in the maritime industry. So this gives you a sense of the size of opportunity in this sector and the government's focus on this sector as well. There was a new mega cluster on the east coast at Duggarajapatanam at AP, which was announced, and the investment in this project would be roughly about 30,000 crores. Our Prime Minister also talked about increasing the efficiency of the sector by lowering the vessel turnaround time to less than 48 hours and also scaling this sector further in terms of infrastructure, capacities, etc. We also spoke about setting up of green shipping corridors between India and several other countries nearby. And from all this, you can sense the scalability which this sector has will continue to grow further in the next decade as well. Now let's talk about the business model of Cochin Shipyard. This was started in 1972. It's a public sector undertaking, one of the leading players in India in shipbuilding and ship repair. It also exports to other countries, and out of its total revenue, roughly about 60% of the revenue comes from shipbuilding and 40% comes from ship repair. Now when it comes to shipbuilding, it designs the ships and builds the ships itself. It does both defense as well as commercial ships like aircraft carriers, patrolling vessels, the missile vessels. In defense, it does anti-submarine warfare shallow water craft. So this is a vessel which detects and destroys enemies' submarines which are underwater. So shipbuilding typically is a multi-year contract. It extends more than 1 year, and hence the billing or revenue recognition is done on the basis of different milestones. Accordingly, the payments are also received on milestone basis. This is a lumpy business. So in 1 year, when higher milestones are reached, you will find the revenue higher, and the next year you may find it lower. Under ship repair, the company has such capacities. In fact, they have commissioned 2 new capacities which increases their capacity in terms of doing repair of several ships together and also the turnaround time of the ship repair. They also do refitting, upgrading and conversions from one vessel to another. 2 new facilities which the company has recently started for ship repair. The first one is ISRF, which stands for International Ship Repair Facility, and another one is a new dry dock. I'll show you the pictures in the coming slides and you will understand what is the scale of capacity expansion the company has done. Under ship repair, the billing is done on the scope of the job, number of hours they have worked for the repair, and sometimes on the basis of number of slots they have worked for that repair. The third and the final segment which the company is working in is the strategic and advanced solutions and training. This is a segment where the company, along with the present manufacturing, they are working on the future projects, developing new designs and technologies. They are working on developing autonomous ships, the way we have autonomous cars. When you speed up, there is an obstacle and the car stops automatically. So such autonomous features they are developing under ships. They are working on H2 fuel cell boats, so the boats would be hydrogen powered instead of the diesel powered boats. They are doing R&D on developing new ship designs. They also do startup funding under their USHUS program. I am talking about the startups which is under the maritime sector, and their institute, which is the Maritime Engineering Training Institute, comes under this segment. Now let's talk about the infrastructure that the company has. Their main yard is located at Kochi. In fact, the new one, which is the ISRF, is also at Kochi. They have their repair units in Mumbai, Kolkata and Port Blair. And through their subsidiaries, they also have facilities at Udupi and Hooghly. So this is a very brief and simple explanation of the business model of this company. Now let's look at the chart of the last 4 to 5 years. Post-COVID, especially in 2023, the stock came into the limelight. In fact, the sector came into the limelight when they started receiving huge orders. The order book swelled and the stock gave a massive rally up to somewhere around 2,980 rupees. So it generated massive returns for its shareholders. From then, we saw a very sharp correction towards the 1200 range. So this was even less than half Then it started consolidating and now it is trading at somewhere around 1792 rupees. So from a support perspective, as per technical analysis, the 1200 range will act as a strong support for this stock. And the 2500 as well as the 3000 range will act as strong resistances going forward. In 2024, the company split their share into face value 5 from face value 10. Now let's look at the financials. In FY21, the company did a revenue of about 2,800 crores, which increased to 3,190 crores in FY22, which dropped to 2,330 crores in FY23, then jumped to 4,500 crores in FY25. So you'll see the lumpiness in the business here. So based on the execution in that particular year, based on the milestones which were achieved, the billing which was done, the business can be lumpy. Overall, if you see the sales growth in the last 10 years, 5 years, 3 years, it has not been very impressive. The trailing 12 months growth is about 23%, but historically the growth has been somewhere in lower double digits. So don't expect massive growth of 30-40% kind of numbers from this company. It could grow steadily somewhere between 10 to 20% from here onwards, and that is something similar to what the management is guiding. The lumpiness is also visible in the EBITDA. From 727 crores in FY21, it dropped to 273 crores in FY23, then jumped to 886 crores in FY25. So this sharp fall in EBITDA was primarily due to these reasons. As the sales booked were less, the operating leverage got reversed, so the margins got compressed. The margins in this business also depend on what kind of ship is the company constructing in that particular year. If it is a higher margin vessel, then the margins are higher. And rising input costs also compressed the margins in FY23. A similar trend is also visible in the EBITDA margins. They dropped from 26% in FY21 to 12% in FY23, and right now it is around 20%. So 20% and upwards you can consider to be the normal margins of this business on an average. The ROE is about 15%. This has always been a low ROE capital intensive business. The inventory over a period of time has been rising. I'll show you the details in the coming slide, which could be an area of concern going forward. The cash flow is very strong. In the last 5 years on an average, 100% of the EBITDA got converted into operating cash flow. The government did an OFS in 2024 at 1550. So in PSU stocks, this is some overhang which is always there. They have an other income of about 380 crores in FY25. So EV EBITDA would be a more suitable metric of valuation for this company, because this other income has a major impact on the profit after tax. It's a cash rich company because of their strong cash flows. Now let's look at the ratios. I'll show you the inventory days here. They increased from about 50 to 100, which was a trend in the earlier years, to almost more than 300 days now. So the company should work on improving their efficiency in managing their inventory. If this continues to rise, then it could be a concern for us as investors. If you look at their balance sheet, they did not do any major capex up to FY20. Post that, they started working on their 2 new projects, which got completed in FY25. And you see that in FY24, the fixed assets jumped from 722 crores to 2,800 crores. So 2 new facilities which became live in FY25, where the first one was the new large dry dock, and the second one was the international ship repair facility. These are the 2 facilities which got commissioned in FY25. Now, what are the reasons for the sharp price correction from that top to nearly less than the half? It's a lumpy business, as we've discussed. Based on the execution in a particular year, the revenue and the profits will vary. At one point of time, the valuations were very expensive, so the valuations came back to normal. The margin compression was visible because of the lumpiness in the business, and the government's OFS also created an overhang on the stock price. Before we move forward, if you are not a part of our Telegram channel yet, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my view on the market. I also share how you should do some asset allocation, some important news and views so that you can increase your portfolio returns. More than 9,000 people are daily in touch with me through my Telegram channel. Now let's talk about the growth prospects of the company. The order book is massive, about 21,100 crores. Out of this, about 19,600 crores is from shipbuilding and about 1,500 crores from ship repair. Out of the 75 vessels which the company is building, 25 are at the design stage, 37 at the fabrication stage, and 13 are in the advanced stage of finishing. Out of this 19,600 crores, 13,700 is for defense. Commercial ships for domestic use is about 1,700 crores, and commercial ships for export is about 4,200 crores. You will be surprised to see the order pipeline, which is about 2,85,000 crores. This shows the visibility of growth in this business as well as in this industry. There are certain very interesting partnerships which this company has done with people abroad to work on new technologies and collaborations and develop new products. They have tied up with Switzer. This is an LOI for electric tugs. So tug is a vessel which pulls another vessel. So to develop electric powered tugs, Cochin Shipyard is working with Switzer. The next one is with Dry Docks World UAE. This is an MOU for repair collaboration where both the partners would benefit and Cochin Shipyard would get more international orders. The third one is with HTKSOE, which is Hyundai Korea. This is an MOU for shipbuilding cooperation. Korea is also very good in shipbuilding technology, so Cochin Shipyard will benefit through this partnership. They have received an LOI from an European client for development of 1700 TUE LNG feeder container ships. So this is a very big order which they received recently. So going forward, they will focus on developing new technologies, ramping up their existing facilities which came into operation in FY25. They are guiding for a revenue of about 14-15% growth in FY26 with a PAT margin of around 15%, and they aspire to double their revenue by FY31. So this is a detailed growth outlook of the company. Now let's talk about the valuations, which is the most critical part. So for this company, I have chosen EV/EBITDA as the most suitable metric because, as I mentioned in the earlier part of this video, that other income will distort the price to earnings ratio. And going forward, depreciation also will be very high as these assets have got into operation in FY25. I'm considering the last 3 years EV/EBITDA for this company because the re-rating in the stock happened from FY23. So if I consider a longer term average like 5 years, 10 years in other companies, the median EV/EBITDA will appear to be very less. So right now, Cochin Shipyard is trading at an EV/EBITDA of around 35 and the last 3 years median is around 26. Mazagon's last 3 years median is about 20. Garden Reach Shipyard's last 3 years median EV/EBITDA is around 16. Although Mazagon and Garden Reach have lower margins compared to Cochin Shipyard. So looking at these numbers, I feel the current valuations are slightly expensive and an EV/EBITDA of around 20 to 25 times for this company would be a reasonable valuation for someone who is looking at entering this stock. Now, what are the risks of investing in this business? It is a very policy driven business. Whatever the government decides in the budget, outside the budget, in terms of the capex spend, pushing their margins, deferring the projects can drastically impact the business of this company. If the government decides to further sell their share through an OFS, it will further create a pressure on the stock. It is a lumpy business, so you can't expect a straight line growth in revenue. Closely look at the inventory management going forward. There could be execution risks post the new capacities have ramped up. Raw material price have to be cleverly managed. As the company receives large orders from single customers, it is impacted by a customer concentration risk. And if you buy this at absurd valuations, you could have a valuation risk also. So now that you've understood the business model of the company, the growth prospects, the valuations, the risks, what is our overall view on the company? If you're holding this stock from lower levels and you have made decent profits, continue to hold as the order book remains steady and there is a strong pipeline. And the valuation at this point of time is not very stretched as it was a couple of years before. But if you're looking at a fresh entry, wait for some correction in the stock and then gradually accumulate at the valuations which we discussed. So that's about Cochin Shipyard. I hope you like the crisp analysis. I've tried to simplify all the important points in this small video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel. It's a free channel. Thank you for watching and have a wonderful day.